All right, good morning, everyone. Sorry about the really late start. We had some technical issues with my video card this morning. Let's kick it off. All right. Great rally out the U.S. session, out the U.S. and last night's session. We've traded up well over 1% on all three of the major indexes there. Really a massive reversal you saw in risk as well. We saw everything from the yen weakening back out to the emerging market currency starting to strengthen. And it was really just a full-on risk-on rally. I think we definitely saw a little bit of relief in yesterday's jobless claims numbers, and kind of following on the back of the previous day's ADP numbers, which were actually reasonable. And so I think the market's called a lot of people short, a lot of people calling. I mean, I've never seen so many people call for a crash. Not just a sell-off, but a crash over this week, which is incredibly interesting. Today, obviously, we've got the non-farm payroll number, which is the big daddy that we've been waiting for. We're probably going to get some sort of seasonal impact in it, so I'm not sure if it's really going to be as important as it always is, but nevertheless, the market's going to be anticipating it greatly today. Asian markets, full-on rally mode as well. We saw Nikkei, which is closed up over 2% on the day, 2.17%. We also had China, which is kind of finally opening following the New Year holiday. Very little, response out of that. I guess just kind of managed to eke out a gain, but its first day open, so I think that's significant. And then, obviously, the rest of the market rest of the Asian area managed to rally on the back of the U.S. markets last night. So Japanese yen weakening out nicely, like we talked about before. That is one of our best leading indicators we've got again now. So just keep a close eye on it. Last night, every time that I saw it move, 10 basis points, the S&P was up another 2 points. It was just it's something we've got to be following on a daily basis now. All right, we've got ArcelorMittal, which is out this morning. Headline earnings per share, big miss, 54-cent loss versus expectations for 11-cent profit. Revenue number was at 32.4 billion. Expectation was for 33.2. So it's a pretty significant miss. We also had this morning Deutsche Bank coming out with a rated new hold on Exaro, and then we had them cut Kumba from to sell on the day. So it's every man for himself in that stock. Obviously, Kumba gets upgraded to a buy or either a sell by every broker every other day now. All right, China, HSBC Market Services PMI number slightly weaker than prior numbers this morning, continuing to show a little bit of heavy data out of there, but markets are managing to shake it off at the moment. We've got SA gross reserves read out this morning, as well as net reserves. We've got trade balance from Germany at the open, the French trade balance. We've got industrial output out of Spain later, as well as the trade balance in the UK, industrial production in the UK, and manufacturing production in the UK. Then later we've also got industrial production in Germany, and then obviously the big one, non-farm payrolls and the unemployment rate in the States at 3:30. All right, let's jump into the maps. We're going to just keep it short and concise this morning because we're running so late. But the first thing we'll have a look at is MTN, which yesterday you can see there made a big reversal at the end of the day. I mean, somebody just came in taking huge amounts of paper there toward the end of the day. I'll shorten it up a little bit here just to kind of show, we really put in this consolidation, somewhere between 93 and 200, which we've managed to pop out to the upside of. So I think, hopefully we get some sort of retracement up to maybe where we fell out the bottom, which is about 210 Rand. I wouldn't be surprised to see us get up there. But 205 is really the first hurdle. If we can get above 205, then we could take to 210. So those are kind of the levels we're going to be looking at for MTM. Next one we'll look at is Discovery. If you look out, I'll actually drop it out to a 2-year here. And you can see there, beautiful head and shoulders set up there in Discovery, which we have really dropped out the bottom of. I think what we're going to be looking for here is to see if it gets back up here on a retest around that sort of, call it 75 to 77 level, and if we retest that and fail, then I think that's the time to maybe really pounce on it. Obviously a little bit oversold. We're looking for markets to rally today on the back of U.S. markets yesterday, so watch that one closely. I think also it's important to note that they've got earnings on the 20th of February. They're expecting 17% rise on the EPS number, so just keep that in mind. Could have a trading statement over the next couple of days. If a trading statement does come out, most likely it's going to be a beat on expectations, which would be probably put this thing into a huge reversal. So just be careful if you're playing it in the next couple of days. Steinhoff, shorten it up a little bit here. Steinhoff, you can see, I'll shorten it up even more, making a bit of a bull flag here. This thing's just been incredibly strong. And yeah, so nice little bull flag there. Broke out the top of it yesterday. Target could be up to close to $50 on that breakout in Steinhoff. And then the last one we'll just show quickly is Murray's. Murray also been in this head and shoulder pattern, and it's already made a little bit more of a reversal to the upside, looking to test the neckline here. We're sort of at that level there. Depends on how you want to draw it. If you want to try to draw it straight across from over here, but either way, somehow or another, we're more or less at the neckline, and on Murray's, and I think if we fail from here, if we fail the neckline and we fail the 200-day moving average, that's actually where you pounce on it. If we start to drop below what would end up looking like a bear flag. And that's it for today, guys. Thanks a lot.